Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of October the 17th, 2011. Now, getting started this week, we can see here I'm starting where I always do with the US dollar index. Very important index to monitor when trading basically all markets, not just the foreign exchange market. So looking closer at this, we can see that the Vantage Point software, a bit of an actual mixed signal here. Now we have our triple EMA cross that is getting ready to complete. However, we can see our predicted short, medium, our medium and long-term differences are moving into grossly oversold territory. This is warning that we may or may not have a trend reversal here. Now again, looking at these patterns that we see in the dollar index, predominantly the dollar starts to gain strength towards the latter part of the month and the first part of the new month. So I would be very cautious about selling dollars. Let's just say that. And if we are, in my opinion, it's going to be a short-term play. So looking at this, our predicted MACD, predicted TSI, they're in heavily overbought territory. This has not worked itself off yet. Now we can see the zero line on the MACD, on the predicted MACD from Vantage Point. I believe there's a very good possibility, I should say, that this will hold and the dollar index will start moving up. So I would monitor the 76. If we can even get down to the 76 level, I would monitor this area very closely at the start of the week. Now, what does that mean for equities? Well, you can see here that I have drawn this line right across here. What I want to point out is that when looking at these resistance points in this line that I've drawn, they all come in right around this 1220 area, 1230, somewhere in and around that area. Now, what I also want to point out is you can see that I've drawn these lines on the bottom. We have not had a higher high, but we have had a lower low. Very important to remember this. We've had a big rally on Friday in the equity markets, which further weakened the dollar. Bit of a contradiction there, considering the retail sales number was better. Excuse me. So in theory, this should help strengthen the dollar, but it regrettably indirectly strengthened those equity markets and the dollar weakened. This correlation at this time of year may not hold. It's perfectly reasonable for equities and the dollar to go up together, particularly at certain times of the year. Those seasonal patterns, very important. We can see here also with this S&P 500, the predicted medium and long-term differences, very powerful indicators from Vantage Point, are clearly warning that this is overbought. So if this is overbought and the dollar is oversold, I think we can put two and two together here, that the current rally in the equity markets may not be what it appears to be. So again, we want to be very, very cautious here. Now, of a point of interest here, the predicted MACD, we are trying to break above this zero line. The trigger is not broken above, but we'll see how this one plays out. Looking at the gold trade, let's have a quick look at this. We're going to bring this up we want to first bring this up on our triple EMA cross to see what's actually going on with this. We can see that we have a significant amount of resistance at this 1681 area that has again failed. This again warns us that maybe the dollar is not as weak as what we think it is, or what it's going to. Remember, with trading and how I like to do things on these presentations, it's not about what it's doing right now. It's about what it's going to do. Okay, very, very important thing that I'm going to point out there. Now, the predicted MACD, predicted TSI, they are absolutely in oversold territory. So it needs to work itself off. Our predicted short, medium, and long-term differences, they're actually at trend-ready levels. So when we look at gold and we start to break this down, you can see the short term is good, medium term is higher, long term is higher. So we may actually get a breakout, but we have to take out, in my opinion, we have to get above 1700 and we have to stay above 1700 in order for this thing to really get some legs to it. What does that mean for silver? You can see it's pretty much exactly the same thing. The key level, we've closed at 32.17. 32.95 is the critical level. Is it going to break above it? Well, this has a high, very high correlation to the equity markets, and I'm not convinced that silver is going any higher. And if anything, there's a pretty serious downward bias here. So we'll keep an eye on this. But again, I have to admit that this is a signal that I always look for. The medium-term crossover, the predicted MACD, and the predicted TSI in oversold territory. This is a very, very good signal. Along with the predicted short, medium, and long-term differences hitting oversold territory, next thing you know, we've got a big bounce out of that $26, $27 area all the way up to where we are now. So we'll see how this one plays out. This brings me to crude oil. Again, it's almost identical to the S&P 500. My opinion is that this is still making lower lows. It is not making higher highs. If we take a look at the light sweet crude oil contracts, and I'm just going to quickly draw a makeshift line on here, you can see that again we're coming down lower. We're not progressing higher. That's a terrible line, but I think you get the gist of what I'm saying here, that if we look at this line right here, this is still lower than our most recent candle, but there is some support down in that 75 area. Looking at the predicted MACD and the predicted TSI, very similar picture here. So I think we're going to get the corrective move will continue, but I do not see potentially a trend reversal in crude oil, not at this time. There's too many other market fundamentals that could affect this. Now, when we look at the 10-year note, the 10-year Treasury note, another thing that we definitely want to monitor, we can see that I talked about this as the dollar strengthened, that this would start to sell off. Well, this is not in a corrective phase higher yet, not yet anyway. So my opinion is the 10-year notes will continue to move lower, and the dollar is likely to start to strengthen, probably in the latter part of this week. So keep an eye on that one also. Now, again, these are all correlated to the different markets are all correlated to Forex trading, to equity trading. Very important that we're looking at all of these things. This brings me to going directly into our Forex pairs. Australia-US, our first currency pair, highly correlated to those equity markets. When I make reference to equities, I'm making reference to, of course, the S&P 500. This is a very similar signal. We are grossly overbought on this. It's gotten a big push on Thursday and Friday, partly because of the Australian unemployment report was good. Second of all, that bump up in those equity markets. Australia shot higher. This is likely to be very, very short-lived. Again, not too long ago, we can see that our low was sitting here. We can see that this lone candlestick back here in August was sitting there. You can see how this is progressively moving lower. What I've stated on these webinars and to my own direct clients on a repeated basis, nothing goes straight up and nothing goes straight down. That's not how the markets work, guys. So now what we're doing is we're going into a corrective phase. I would anticipate a much lower high. Is it going to move higher? Probably. I would expect it to cap out somewhere between 104 and 105, the dollar to strengthen and this thing to plummet with the equities. That's what I would expect. And again, I'm not going to spend a lot of time on it because of that rally on Friday. Now, looking at Euro Swiss franc, you can see I've moved this one into a major pair. This is a major pair, not the US Swiss franc. So when we look at the Swiss franc, this is all eyes are on this pair, bottom line. With my own clients, I've made repeated daily recommendations to get long